Hello, everyone, and welcome to FYI for your investment. And this show is sponsored by 1% Academy. We have a guest with us, an expert today, Tina. And Tina has 16 years of professional experience in futures and options. FNO, a word that everybody is scared of. Futures and options, Tina, you've been in the market for 16 years, expert derivative trader. You've actually dealt with order flow based data analysis and generating option strategies which are directional and non directional. So, welcome to the show, Tina, and I'm very excited to talk to you and learn some strategies from you.
Hi, Nainesh. Thanks for calling me, and I'm really excited to have a chat with you today and the entire crowd. So, yeah, it's been overwhelming to be a part of the India journey of derivative market. It has been a wonderful experience so far. So, looking forward more onto it.
Sure. So, 16 years, Tina. Tell me more about this. How did you start your career into trading? Tell us about what made you interested in trading. And 16 years is a long time. So, tell us a little bit about how you started and how did trading fare for you till now.
So, Dinesh, I would say that I was always headstrong that finance is my domain, and derivatives have always been the my core thing. So, I had my BMS, thereafter my MBA, everything in finance, and to be really very sure, to be the lucky in that front, like our professor during our MBA times was a hardcore trader, and the knowledge which he imparted with us was like immense. So derivatives was there, it was clear कि आपका derivative ही करना है, futures and options. So I give a lot of credit for my decision to derivative to my professor, my late professor, Professor Navneet Bhatia from Dalmia Institute of Management. And it was him who had given that passion, passed on that passion, and it carried over to entire batch of us. So yeah, so and I would say that I started my career futures and options solely. So this is the only thing which I've been doing for the last 16 years. Earlier it was only futures, and now it is only and only options. How the transition has taken place.
Okay, so lovely to know that you are an options trader, and I'm sure I'm going to learn some strategies from you today. Before we go there, Tina, tell us. I mean, one big question: are you a discretionary trader or are you a systematic trader? What kind of trading do you practice in markets?
So Nilesh, I would say that I'm more a opportunist. So like being a discretionary and non-discretionary both have its own pros and cons. So since now in concept we are into the software development, we love to create the products which assist the users in their discretionary and non-discretionary journey. So we look the thing everything on both the angles, both from the discretionary and non-discretionary also, systematic trader also, because there are few insights since option is a non-linear product. So coming with the systematic thing, you need to take care of lot of parameters of time, IV, and those things. So you get lot of discretionary factors also in while creating the system. Also, you have can create a full-fledged system trading also. So we look at the product from both the angles, discretionary and non-discretionary both.
Sure. So you've been practicing both discretionary trading and non-discretionary. I think one of the biggest problems or things that traders deal with is loss. Tell us today. What is it that you do when you make a loss? How is it that you ensure that you come back to the markets? I normally ask this question for everyone who's a trader and who's been around for 16 years to know how they deal with losses. So tell us, as a trader, what is it that you do?
So, frankly, when you deal with your loss, first you should come to know like you are trapped or you are in a big problem. So, the moment you realize it, so now the question is like, are you ready to move on with this strategy? If yes, then what is the steps you're gonna take it? Now, are you? If the loss is very small and if you think that your view has changed completely, then it's better to cut it off. But if you still feel that your view is still holding on, the loss is there, then you can definitely modify your strategies. So basically, the beauty in options trading is basically where you do the modifications, adjustment of your trade, which at times can actually be a quite profitable journey also, and quite learning journey also. So stop losses, we should be quite aware. If your view has changed completely, cut off that thing, move out. It should not be a compulsive thing, you're riding it off. But if your view is still intact and you want to now make the most of that situation, you can definitely repair it. You can convert your strategy, take the benefit of actually the core mathematics that the option gives to you, take that benefit and you can use it out.
Right. While I ask questions to Tina before we start off to learn something, everyone who's watching us live, this is for you. If you want to learn anything in specific in regards to options, please go out and put it on our comment section, and I'll ensure that Tina speaks to us about it today. So, Tina, back to you. I mean, yeah, loss is a part of a trading journey, and I think every trader has to kind of accept loss and learn from it, and that's something that you also mentioned to us. Tell me, the fact that you have traded futures and now you trade only options. There are a lot of people who are dabbling with options of late. New entrants, people who still don't understand time value. Most of them are buyers. Tell me, from a retail trader perspective, what are the biggest challenges that a retail trader faces when they enter as products like futures and options in specific?
So, Nanish, I would say that over the period, we have seen lot of transition in the people also, in the clients also. Now the people are quite adaptive in terms of knowledge, in terms of learning things. So I would say that if you're entering the derivative market, first get the proper know-how of it, especially when you're dealing with the options. Because in options, option is a mathematical product. Okay, so just like in maths you have one answer to a solution, similarly in option you need to know the core mathematics that goes beyond it. So like what are the parameters that drives that thing. So I would say that in option you have just five parameters, but those five parameters are so interlinked to each other that you cannot miss it out. So you start with derivative. If you gain a proper knowledge, which I think that today is very easy, because a lot of learning platforms, like you have 1% coming, a lot of learning platforms are there which are there for you to educate, get the knowledge, and I say that option becomes very very easy later on. But your first is the foundation should be crystal clear, the foundation should be strong enough. Once you understand your basics of futures, basics of option, you can correlate it and you can do wonders. So then your trading journey becomes an exciting and really fruitful journey.
Yeah, I mean, Tina, thanks. I agree with that. Talking about 1%, we've taken this up, the 1% Academy, and we've actually, made an effort to get our clients, traders, students, employees, everyone involved in learning what trading is. We started with our first course, which was the foundation trading in technical analysis. We did an amazing 125 people, and now we have a new course coming up, and that's starting tomorrow, and it's certified by the BSc. So it starts tomorrow, 8th of October. Students get 50% scholarship. This is basics of technical analysis. So before you jump on to learning options, आप ऑप्शन सीखने से पहले जो टेक्निकल्स सीखने चाहते हो, जिसके आप व्यू बना सकते हो मार्केट में, we're teaching you that. We're teaching you how to build a view. So this is the course. We're going to put the link in the comment section. If anyone would like to be a part of this, please click the link and enroll for this program. After that, Tina, I'd also like to take this opportunity to tell you we are bringing a very exciting options trading course, and that we'll announce it soon. And the goal is to get people and the retail participants to understand what options are. These are not simple get rich instruments, and I'm sure you will agree with it, right? Every retail participant, by looking at Twitter, wants to make 1,000% in a day, wants to make a 5-figure profit in a day without understanding what these products are. So our goal is to get everyone to understand it before they trade it. Tina, talking about directional and non-directional. I mean, we've had traders, we've had people who actually trade strategies जो एक डायरेक्शन में मार्केट जाता है, आप ट्रेड लेते हो, पैसा बनाते हो. यार मार्केट कोई भी डायरेक्शन में नहीं जाता है, आप फिर भी ट्रेड लेके पैसा बनाते हो. Tell me more about this. How can a trader make money even when markets are not trending?
So, Nanish, when we say that market is not trending, that means there is still a direction in it. The direction is it is non-directional thing. So the beauty of option is like it is non-linear and you can make the way you want it. So you can create your own structures. So you see that nearly 65 to 70% time the market is consolidating. Take the current example. We are in a broader range, 16,600 and 17,400. Moment we went above 17,400, we saw the resistance coming up. The moment we went closer to 16,700, so we saw the support coming up. So this becomes like a broader range for it. Now, this type of markets you can play around wherein you know that there is a defined resistance and defined support. So you can sell a call on a higher end on your resistance side. You can sell a put on your support side. But the catch here is if you're a newbie, selling option comes with lot of risk. So in that case, once we are at the initial stage of trading part of it, you should always hedge yourself. Buy a higher strike call and buy a lower strike put. So what happens? You create a range. So indirectly you are playing out the range, but with the safety. So non-directional also you have a lot of strategies like a short straddle, short strangle, and butterfly and condor. So I would rather say I'm a firm believer of hedger. So like you don't take undue risk unless it is justifiable and unless you know how to repair it. So when you are at this initial stage, get yourself accustomed with your hedging part so that you are in the relaxed mode. Learn, absorb more and more information. Do your trading, paper trading, simulation, do that thing. Get the gauge, and then you can start with a naked short selling thing. So now this is from the non-directional perspective. Coming to the directional perspective, you have your single leg options, you have your bull call spread, bear put spread, verticals, you have your ratio spread. But again, directional, non-directional, we know we have created the view. The most important thing is what to do and when to do. So if you think in the option, the most peculiar thing or the most exciting thing is the time. Start of the expiry is a different framework, and when you're closer to the expiry, is a different framework. So in the option, the most important thing you need to understand is how is time favoring you. If you have lot of time, then you can hold on to options say 4 5 days. But if you are in the very close of the expiry, you can't hold it on more than 2 days also, 1 day also. So the strategy is suitable depending upon your time left to expiry. So that's how. So for all this strategy thing, the first most important is the concepts of options. What does actually a long call does or short call does? I combine the two. Now how they behave. I have locked my profit. I buy one call, I sell two call. Now my risk is undefined on the higher side. So if you get your core concept, believe me, in option there are only four stuff: long call, long put, short put. Rest everything is just one above the other. So getting the strategy, you don't need to know the name of the strategy. You need to know the payoff of the strategy. That's it. So
I
this is
agree.
what.
I mean, sorry, I agree. And you've spoken something very, very important. The four things once you learn them: long call, long put, short put. And once you've understood the payouts, you understood when you put them together how they behave. It kind of makes it very simple for you to build a view and then do them. I'm going to come to the very important part of option trading: building the view. I'm going to talk and ask you about that, Tina. One is putting the strategies in the market. The first one is actually building a view, understanding whether the market is directional, non-directional, understanding whether data tells us this is the support or this is the resistance. I mean, I'll ask you and open the floor for your session where you will tell us how to go about finding these supports and resistances. Not only that, also how you can act as an option buyer or a seller. So I have a few questions in the chat box, but I will take them as soon as you finish talking to us about the directions.
Surely, surely. So I will just continue. Uh, I'll share my screen. Yeah. Hope my screen is visible. Nanish, is my screen visible?
Yeah, I can see it.
Okay. Perfect. So today we'll discuss about how you create a view. So the beauty now lies is like where you have 95% of the volume of the market, that's options. You have derivative, which is predominantly driving the entire volume game. So the core thing comes is like you cannot ignore the derivative data while forming a view. And once you have a proper derivative data in place, then you can really create a lot of edge in your trading. So today we'll discuss about how you sense the mood of the market via open interest of futures and options, identify the directional moves and support and resistance, setting up trade with option data, and we'll have a Q&A. So now how do we sense the mood of the market? So we often talks about the news and events. So basically, if I have any RBI policy coming, okay, RBI policy 50 basis point hike, market to bearish होने वाला है. That's like we have just assumed that thing. But maybe like there could be something more beyond it. The market has already discounted, say 75, and if 50 basis point is coming, it is actually good. So the news and events could be one way of taking the mood. Then you have the technical indicators. So we say that India is the land of technical indicators, technicians. So we all are by default having a lot of soft corner for technicals thing. So we have a lot of practitioners in India who are doing the technical analysis, and definitely it's very good one school of thought. When you combine the technical analysis with the derivative analysis, the combination creates a wonderful edge in trading, and which is where the market is currently moving on to. Then you have the proper derivative data. You don't have to look the technicals thing. Purely based on the derivative data, you first understand where the market is actually, how the data is panning out, read the data, see it, and then find a view out of it. एंड यू डेफिनेटली हैव द इंट्यूशन. सो लगता तो है कि इधर से 1000 पॉइंट बढ़ जाए, निफ्टी चला जाएगा 20,000 दिवाली पे. सो दिस इज लाइक अ इंट्यूटिव वे ऑफ डूइंग इट. सो we'll stick today with the derivative data. Okay, now how do you sense the market? So the first very core of it we'll talk about is reading how the market is moving. So we often look like it, the gainers and losers. Okay, आज 50 में if we say that there are 20 gainers, 30 losers, we see that the market is at midway. If we have 5 gainers and 45 losers in Nifty, we said hardcore shorts are there. But when we talk about the derivative data, we need to know that what happened along with this price action. So if I say there was a day where it was 45, well, where the price came down, okay, the price were negative and 5 were price were up. But in that 45, only 10 of that had a OI increase. Rest everywhere it was the OI decrease. So now the market map changes. It's no more a short, it is actually long unwinding. So I will take you through what does the long, short, long unwinding, short covering means. But you go deeper through the derivative data, dissect it, the price and the OI action, and come up with the market map. So if you start seeing that more and more people are into the long category, that means it is a proper bullish day. More and more people are on the short category, that means it's a proper short day. If you see that there is an equal number into the long, short, unwinding, covering, that means market is completely sideways, no one is in a mood of coming with any decision thing. But if you start seeing that this long unwinding or the short covering is taking the major chunk, that means it's just a pullback. It is not something, a trend which has formed. So you should always play with the main trend and not with the counter trend. So it could be just be a short lived. So this derivative data helps you to dissect those information and come out with whether I should be doing playing out with a pullback or with the actual trend.
Tina, before we go into understanding in detail the short covering and long unwinding, just for the benefit of the users, can you just once in simple language explain what does the long unwinding
Uh, Nanesh, I lost him.
listening to us today?
One sec. So I will explain you what does the long built up and short built up, the all those four category means, right?
Yeah, yeah,
So basically, when you have a price is increasing and the OI is increasing, we call it as a long built up. So that means as the price is going higher, the new position is getting built up. So that is pushing the price even more higher. So that means a fresh interest is being seen in that contract. That's called the long built up. Take the second case, reverse thing. The price is falling and the OI is increasing. If you look here, so the price is decreasing, the OI is increasing. That means lot and lot pressure is coming by the new traders, the new OI which is coming into the system. So that's called basically the short build up. So these are the two, the main one which is the trend decider, the long and the short, the bullish and the bearish one. Now you have the third scenario where the price is falling and the OI is also falling. So when does that happen? Basically, that happens when there has been a very good run up and say now I'm doing a profit booking or I'm just covering my longs thing. So that's called as a long unwinding. So as we all know that is very much impossible, like the stock can continue to go to 90 degrees thing. We often need a relaxation thing. So the long unwinding is just that relaxation which it provides to the prices. So it is just a neutral view and it is not a bearish view. So we need to be aware that long unwinding and in short built up, though the price is falling, but the difference is the OI. So long unwinding is just the relaxation. The bulls are just relaxing thing. They can again start the upward trending thing. Whereas in the short is actually the new money which is flowing by the bearish people. The fourth scenario is where you have the prices increasing but the OI is decreasing. That's called as a short covering. So when does that happen? The price has been beaten up badly. Now, definitely the short people will also cover their profit. So they will also book their profit. What they do now, they will buy out. So that is called short covering. Existing people are squaring off the position. The price is going higher. Now the short covering, the price will pull back. But till when will it, hold on that covering is very, very important. So the short covering, it will be very fast. Okay, it will be very fast. Maybe like 2-3 days, you might see 10-12% move also in a future thing. But it will start seeing a resistance and the major trend, which is the short, can again start off. So now long and short are actually the main trends. Unwinding and covering are the counter trends which we have. So this is what is in the future concept. Now if
sure.
we take the earlier,
So Tina, yeah, again, sorry, coming back, open interest is basically, the number of open contracts in the market. So,
hmm,
unlike volume, people confuse volume and open interest. So, I just wanted to highlight that. Unlike volume, open interest basically is when to a contract enters. So, there's a buyer, there's a seller, and a contract comes into the market and it increases the OI. OI goes up. When contracts start moving out of the market, which means buyers and sellers are moving out of their position, open interest comes down. So the study that Tina is actually talking to us is a very, very interesting study to understand, how OI and price movements can be put together to kind of know what the trend is. So yeah, over to you, Tina.
yeah. So now I'll take back to this slide where now you have the bifurcation of long, short, long unwinding, and short covering. These are the four categories. Now, how to know the mood of the market? So, what we are doing is we are combining the long and short covering together. So, add up the instruments which are in the long and short covering, divide by the whole, the counter, the entire sum. So, that if it is more than 0.65, so that means the market is in a bullish zone. So you have the long and short covering, this two divided by the entire market breadth. If it is more than 0.65, that means market is in a bullish move. Similarly, if on the bearish side, if you have the short and long unwinding, divide by the entire market breadth, that tells you the market is in a bearish move. So now, unless you don't see that 0.65 and above, that means the main trend is not established for the day. So you can play the non-directional one. The moment you start seeing that it is more than 0.65, that means today is the day of directional trading. So you should start looking out for the opportunity from the directional trading. So this you can check in the morning session 9:20, 9:30, and then in the mid afternoon how the breadth is now changing, so that if you want to do a BTST or the next day view, you can take that view. Okay.
Okay.
So graphically, if we see this, now this is the, you have the green, the longs were added. There was a minor pullback. In that time, only the OI was unwinded, the price was unwinded. Okay, we did not see a fresh OI increase. So this is something which we need to always keep in our back of your mind. Not all negative price means that the market is in a bearish tone. Okay, we need to always look out with the OI action also. If the OI is decreasing, that means it's just a pullback. The major trend has not changed yet. Now again we start seeing the OI is increasing, the price is increasing. There's a long thing. The price decreases, OI decreases, unwinding, again a long. So this is basically a bullish trend where you will see a price, it goes higher, minor pullback, again higher, again pullback. Now you start seeing that the price is decreasing, but here instead of OI decreasing, it is increasing. Okay, so this is the spot where the shorts have started entering the system. So this you need to be very much aware. Now the moment we start seeing that this particular relationship is cancelled, it's not more, it's no more holding up, it's a time to book all your longs, because now the market is getting dominated by the short traders. So now the trend is moving to short. Again a covering comes, and now there is a short. So you will not play the first short, you will let it get covered, and then the second short is where you will start playing out, because you never know it will fizzle out or how long it will go. So let the covering happen, and then the second shot you will start playing off. So because now the trend has started emerging. So this is how you see the price and OI action in the futures. Long, unwinding, long, unwinding, long. So this is a bullish zone, short, covering, short. This is a bearish zone, right? So now you have seen there are two cycles which we are talking about. The one cycle is the long and long unwinding. That's a bullish cycle. The second cycle is the short and short covering. So this is like a pair. Okay. So this will move
Sure.
in tandem. So for the bullish one, long, long unwinding, long, long unwinding, I will continue to play the longs in this thing. So whenever I see a unwinding, I might convert to a bull call spread. Again, when I start seeing that the major trend long is coming up, I can shift the back to the long, square off my short leg. So you play the major trends.
Sure. So before we go ahead, Tina, I'll ask the audience a question here. So for all you guys who are watching this interesting data analysis, where the market is going, a question on the long built up and the long unwinding, short built up. Question for the crowd. Okay, please put in your answers on the chat box. What do you think? When should you take a fresh position? When out of these four, the long built up, short built up, long unwind, and short covering. When should you actually go out and take a fresh position? So while we get answers from the crowd, Tina, over to you again. You can continue,
Sure.
and we'll see how the crowd is responding.
Sure. So your first sequence is the built up and unwinding. Okay. Long unwinding. Now, if we take certain examples, so over the period, there have been a lot of examples. We might see the current examples also. This was like in the last year, there was a Nifty was in a one-sided up zone. Okay. So we saw from like a 15,500 or so to 18,000. It was one-sided the entire August September thing. Syria. So more majorly, if you see in this period, it was green or blue, green or blue. Very rarely did we saw the red. There was only one red. So that means in this type of market, even when the price is coming down, we should never do a short, because unless there is a confirmation that there is a multiple shorts are creating, we should not do a short. It's just a minor pullback which is happening. It's a like a sort of like a, it has come to a support. Again, you can take a trade and you can build up the strategy. So this is a hardcore long unwinding cycle. The second one is like a short and short covering. So you have a price falling short, and then the price is recovering with the OI coming down. Now this was like a Kotak Bank thing. So it was like a, if you see here, it was short, the red one. Then comes the yellow. So this price action, there was like a unwinding which is taking place. This price. So if we get carried away, oh, up the bottom bun chuka hai, up to idhar se price girega nahi. We need to understand it is just a short lived. So short covering would be very ferocious. Okay. So it will be coming very fast. It will get keep us under trap like oh, now the bottom is made, everything will go off the ceiling goli. But again the short starts coming up. So this entire move was driven by the short covering thing. This entire covering happened. So that wasn't a major long which took place.
Tina,
Now,
my question here is, how do you see the blue candles in case of the short covering? Like, what should you do as a trader in these blue candles that you see?
so
And
basically,
in the
yeah.
in the previous chart, you also saw some red candles. So, how would you handle these red bars?
So basically, if we see, you can always say that directional wise, I will say in last 20 days, if your major chunk, more than 70% is either green and blue, so that means the primary trend is like a bullish trend. Okay.
Okay.
Similarly, in the last 20 days, if you start seeing that majorly is more than 70% time it is red or yellow, that means the primary trend is bearish, the short one. So in between any unwinding, we need to ignore. So if I say I have a cycle of green and blue, I start seeing the yellow. Yellow is of no meaning here because I don't have any short previous to that. So any unwinding or any covering should primarily be supported by a prior long or prior short. Anything isolation basis, we just ignore it. So it's just like कि आप वो data को ज़्यादा ध्यान नहीं दोगे. So in this thing, I will ignore this yellow one because I didn't had any short. Had there been
Got it.
like multiple reds coming up, then a yellow, then you will take it, as an important data point. But if it's only dominantly only yellow is coming, then we'll ignore that part. Similarly, in the short and short covering, if we start seeing that the blues are coming, few blues are coming, we'll ignore because you don't have a main green coming up. So if you are having the greens that is long, that is getting unwinded, that means there is a cycle in that. But if there is no green supported before, then you just have to ignore. And one more point here come is the quantum of OI. So when we see the actual graph, I'll show that thing. So just a sec, I will just share my look. Yeah. So if I see the current data point, okay, so now look at this period. So you have the 5th August to say 18th August. So you have this greens were there with us. So I will look just as the OI change. So this is called the absolute OI. So you can see the quantum of OI. So the quantum of OI also makes sense. So if I say that in between there's a like my major trend is long or long unwinding, I start seeing red, one or two reds. But if that red is the OI in that red is very very less, so it is not impacting my major trend. But if the bar of red increases, it impacts your trend, it it negates your trend. That time is just you just be booking your profits, cover your loss, sit aside. You cannot go short. For the short, you need to have a confirmation of the cycle. So this entire period was like a long, long unwinding. Now here we saw a short, we saw green, again short. So this is the point that you now exit the long thing. You will not go and do aggressive longs. Now you're waiting for this cycle. So this red, you have this yellow, and now again the red comes up. This is the point where you take a short trade. Okay, then this short happens, this unwinding is of no meaning thing, this again the unwinding is there. So now whatever we are seeing this pullback, so if we talk about this thing, the last 3 days the nifty is like you have 17,293, 325, 332. So the last 2 days the OI was marginal. Now, one more thing, when you're doing this, you need to understand when you're at the start of the expiry, the by default the OI will be in an increasing mode. Okay, be it and because I am creating a new position. So avoid looking at the OI when you are closer to the expiry. Be it like a 2 days before, 2 days later. This 5 days, avoid looking at this built ups and the OI thing, because there would be a rollover thing coming up. There would be the position which would be getting built up. As you go in the second week of the expiry onwards, this becomes more and more valuable thing. So we should know that how much emphasis to be put to the data and at what time. So the first near to the expiry, monthly expiry I'm talking about, expiry minus 2 days and plus 2 days. This 5 days, avoid looking at the major OI because there will be a lot of rollover stuff. The new positions create a view. So presently, if you look at the Nifty, you have an indecisiveness. You don't have any trend right now. It is a mix of short, it's a mix of long and Nifty. Now, if we talk about Bank Nifty, so now if you look very categorically, this entire trend, we started off here, it was green, yellow, marginal, green, blue, green. This yellow will ignore this because I don't have any short prior to that. This green. So here, this entire trend is of long, long unwinding cycle. Then you have this expiry of August coming up. You ignore this part. Again, the September begins with the long, long unwinding mood part of it. Now, if you see towards this 20th last week of September, the aggressive reds start coming up. You do have the rollovers coming up, those things, but it got carried over in the October also. So presently, what we are seeing in a Bank Nifty is a covering mode. It is not a long thing. So how much weightage we need to give to a covering and how much weightage we need to give to a actual long trend, we need to be very much aware about it. Had this data been like this, entire price action would have been supported with increase in OI. That means this rally would have been sustainable. But it is not supported by increase in OI, but was a decrease OI. So that's where it shows that Bank Nifty currently is at the resistance point of view. The data is not supporting the trend. So this again substantials your core data. So you have your price action, normal technical analysis, the price action is there. When you have your derivative data overlaying over it, you get the confidence. अच्छा ये वाला trend मेरे को खास नहीं लग रहा है. I will just take one lot. Oh, this is a major trend which is taking up. I will take your 2 lots or 5 lots. So you can do your money management with this data points. Hope Nanish, I have answered your question on this part.
Yeah, you have.
Okay. So now this we have seen from the future side. Now we'll jump into the option side. So in options, we often look at the option chain. So that's something like it's a one place or snapshot where you see the entire action happening for that expiry. You always see that the strikes at the center place, the left side is called, the right side is put. The main part comes here is this OI part. Okay, just like we have the future OI, we do have the option OI. And believe me, friends, option OI plays very beautiful role, a very crucial role. So there are ways in which you use this options OI. It's just not the highest call, highest put. There are ways in which you have to look at this value. Now, so so you see that there is a two parties in any contract. You have a buyer, you have a seller. So when you do a option buying, you pay a small premium and you take a participation for the longer term. Okay, wherein like you in a call you participate for the upside, for the put you participate for the downside. But what is there for the seller of an option? The seller of an option is just taking that premium. That's the maximum profit which the option seller is getting. There is no defined profit, and undefined losses is what the option seller is paying. But here he has a very high probability, because I say that if I say that the Nifty I'm selling 18,500 call, what is the probability that Nifty will go to 18,500 by 27th October? It's very very less. It's hardly not even a 1% probability. Say the same thing if I say that Nifty selling a 17,500 call option for the upcoming expiry, so now there could be a higher probability attached to it, right? So option selling is a game of probability. So if you are thinking to be a naked seller in the market, you need to get your maths properly. You need to understand the probability of winning. Higher the probability of winning, then only choose that strike to sell. If the strike has a very low probability, don't choose to sell that option. So I'm talking about probability of winning in that case. Now this is how the option chain looks like. Now you have the highest put we talk about, that's a support, and the highest call is that of a resistance. Okay, so this was like a for 16th September 22nd September expiry, so 17,500 and 18,000. So this becomes your range for the market, because if I say that the more and more people are ready to take the risk of selling 17,500, that means they don't look the market going below 17,500, and more people are selling the 18,000 call. That means I'm not looking that market will go above 18,000. So this range is what the option writer is seeing. Now the entire beauty is how this range plays out. At times you will see that the entire expiry this range holds on. It's very firm thing. At times you will see that even a minor stroke of action of price changes this range very fast. So here is what your psychology game should be. If the range is shifting very fast, that means that writers are not very headstrong. They are not having that guts to hold on to a trade. So that means now the trend can start off. But in the expiry, if you see that despite the prices going below your highest put strike or the highest call strike, but it is not changing the OI part, that means the writers are headstrong and the prices will revert back. How you correlate here is basically you need to look at whenever your technicals are at an important support point, look at the option data and see that where are they placed at. Highest put, if it's breaking, still the put writers are not going out, so that means it is something of very very strong support. So you will not you will know you will not get trapped with the price action thing. Your derivative data will hold you on. So as an option trader, we need to focus on the highest call OI and put OI. So this we have covered. Now, if you look at the data, now this is how it should. So you have here the OI of call, the greens are the call and the reds are the put. So you have this dark green which shows that the actual OI increasing, which is happening, and the dark red, which is like a actual put addition, which is happening. So let's test our understanding. So you have your like a 41,500 and 42,000. So there are multiple call writing which is taking place, and very low put writing is there. So this is one type of structure where you see that lot of call writers are there, but the put writers are not there. So that means people feel that the resistance is strong but the support is not strong. That means that the market can slide down. The
Correct. So I
second,
was just going to ask you, Tina, this means that there is a resistance, strong resistance at 41,500 and 42,000 for Bank Nifty. However, on the downside, we don't see option writers showing that much strength. And hence, we can see some downside coming until we see a big OI built up where we understand that people have interest to buy at this price.
true, very true, very true.
Got it.
So now how it works is like if I start seeing that, say for instance, the first one was the highest call. Here, the now the OI is unwinding and it is shifting higher. So that means the earlier call writers are now moving higher. Okay, and now the put also you start seeing that it is also increasing and it is going upwards. So whenever you start seeing that your OI build-ups are going upwards into the strike, that means it is in a bullish zone. And whenever you start seeing that it is going downwards, that means, say for instance, if this was a highest put, you start seeing unwinding here and you see the addition out here. So that means the put writers are shifting lower. मतलब मुझे डर लग रहा है कि अब ये 17,000 भी होल्ड नहीं करेगा, 16,500 आ जाएगा. So in short, by looking at this your OI data, you are reading the psychology of the writer of the put and the call, how sturdy they are and how willingly they are ready to take the risk. So if they are not willing to take the risk, they are not sturdy and they are shifting very fast, that means that it is not a writing market. The directional play can come up very fast. But other hand, if you see that despite the volatility which is there in the market, intraday में market 150 पॉइंट ऊपर गया, 100 पॉइंट नीचे चला गया, बट योर हाईएस्ट कॉल एंड हाईएस्ट पुट हैज नॉट शिफ्टेड द स्ट्राइक्स. दैट मींस द राइटर्स आर हेड स्ट्रांग. It is the premium eating exercise what is happening in the market. So we'll take certain examples with it. Now this is like a coal India. So now if you look at 205 was first the highest call. Okay, so this dark green is the addition which happened on that day. The light green was the earlier one. This gap, this unshaded one, shows that the unwinding which took place today. So this entire bar was of previous day. So previous day, say the OI was around say 40 lakhs, 42 lakhs. Today it came down to 15 lakhs. There was an unwinding at 205. There was an addition at 210. There is an addition at 210 put. There is an addition at 205 put. There is addition at 200 put. What actually happened? The call writer shifted higher. The put writer shifted higher. So it is a bullish market. So this is called as a option writing trap. So this highest call, the moment the price went higher, now what action the writer of the call will do? They will buy the option. So I will buy the call option. So that will put a thrust on the price and it will go further up. So this unwinding take place and the prices see the breakout. So that's where the entire game of option trading is. So I would say that in options, you need to be just watchful where the covering is happening, especially the short covering, because short covering in option is the most ferocious and it can actually give you this 1 by 10 or 1 by 5 thing. So the main thing is like you need to know when that happens. Now the biggest क्वेश्चन इज वी ऑलवेज लुक दैट कि अच्छा अभी रिलायंस में तो 2500 का कॉल ब्रेक कर देगा तो कवरिंग आ जाएगा. वी फॉरगेट दैट वी हैव द एंटायर एक्सपायरी इन फ्रंट ऑफ अस. So the call writers will not get afraid just by 3 4 days action. They will get afraid only when the time is closer. So the reason why we see lot of volatility in bank nifty, nifty, because of the weekly options. Every Wednesday, Thursday, why we see this activity, this momentum? Because if nothing happens, if I say for instance you have a expiry today at 17500 call is there, it breaches that thing, it will just run up. Okay, that 2 rupees option will become 100 rupees if it goes to 17600, but the same thing will not happen otherwise. Let's take an example. So the first example is the underline is 17500, the strike is 17500, you have 25 days left to the expiry. Okay, we have the RFR 0 because we are taking future as an underline. Volatility is 20%. Okay. So the days is like 25 by 365. So this is the ratio. If the underline moves from 17500 to 17700, that 200 rupees jump, or say a 1% jump, which is very, very normal in Nifty today, the call price of 365 will move to 476, a jump of 30%. Okay, so this is
Correct.
when you have 25 days left to the expiry. The scenario 2 is you just have 2 days left to the expiry, your weekly charm which comes up. The scenario remains the same. The spot is 17500 thing. The strike is 17500. The spot is 17500. But the days left to the expiry is just 2 days and not 25 days. So the moment this 1% jump comes from 17500 to 17700, this 103 rupees option will become 233 rupees. So that's a jump of 126%. So basically, all your short covering in option, the gamma effect. So I won't go deeper into the gamma, but it's one of your Greeks which comes. It comes only when you're closer to the expiry, and there where your entire index options, Nifty, Bank Nifty, and now the Fin Nifty, the entire game is just because of your gamma thing which comes up. So we need to understand when to play what. So be it a buyer, be it a seller, you need to be opportunist in the market. Grab the opportunity when it comes to you. You might be an option writer looking at the data which says that say sideways hone wala, there is a highest call, highest put, there is a thing. But the moment you start seeing that the writers are getting trapped, cover your position and now turn bullish, because you have come to the market to make money. You don't need to tag yourself to be that I'm always a writer or I'm always a buyer. Be an opportunist, because there's a lot of money when it comes to being a buyer of an option too. Okay. So, Nanish, any questions so far on this?
No, I think it's pretty clear. Also, if you have any questions from the crowd, please feel free to put it on our comments, and we will ensure that Tina answers these questions and you get clarity. So, yeah, we've opened up the questions. We have 5 minutes, guys. Please put your questions on the chat box, and we'll shortly answer it. So, Tina, till the questions come in, I think is a very interesting topic that you spoke about. One is the movement, the price movement, and second is understanding the OI with the price, and
Correct.
what effect it gives you, or what idea it gives you as to what kind of trades you should take. Very, very interesting analysis. Also, tell me, one is technicals, okay, where we get our views. How important do you think it is to come and see this kind of data or derivative data, which will help you, give more weightage to your trades? Do you think only purely technical should help, or you think a mix of both is the right way to take trades?
So, Nanish, I would say a mix of both. Really, one, it's a beautiful, combination to be. So, just I will take an example in front of you. This was Eminem. Okay, so we always saw that Eminem had a 900, 925 as the thing. So earlier also it had gone to this 925 thing. So in the May 2022, it came back. This time, post May, mid of May, when it again came back, there was again कि इधर से resistance हो सकता है. But if you look here at the derivative data, this derivative data was of very strong greens. So if you see this, the longs which were coming were very, very high, okay, at this point. So when it broke, so if I take this data, when it broke this time, it was combined with a very strong OI addition also in the futures. So you had a trend of long unwinding in the futures. This is your option graph. So in the option thing, you saw that your 900 was broken and everything shifted higher. So it moved to 1000, it moved to 930, it moved higher. So you saw a fast spurt which came up. So you, when you have your technical analysis and when your derivative analysis is supporting that thing, you really get a rocket. So you come to know that how much you can do your money management based on this data. You can actually, filter out. So if I say that I'm a retail trader, I cannot take 10 trades at one time. If I have to be selective and taking only two trades, I would prefer to go with the derivative data combined with the technical one, the combination of both, and that will be something which I will be betting my money on.
Sure. So, Tina, also to tell you, the breakout of M&M that you're talking about was an all-time high breakout as well,
Yeah,
and that's
yeah.
one of our setups that we do through the 1% course. We have a question from the crowd. I think you should take that up. On option selling, do you suggest index or stocks? What are your views? Should you go out and sell for only indices, or should you also consider selling options for stocks?
So I would say that, frankly, when we talk about a naked selling or with a strategy, both are in a different concept. So if I'm doing any strategy, I will always prefer stocks because we are hardcore stock option trader. Okay, there are a lot of money lying in the stock option which is unexplored. People feel that index is the only place you make money, but yeah, definitely you have a lot of into the stocks also. But you should know how to play it out. We play out with a strategy, definitely not doing a naked writing and so on. In terms of index, I would say that writing index, you need to be a very fast executor. You might be a very good analyzer, but you need to be equally fast executor. That to shift the gear, you need to know it. So writing wise, if talk about the writing, you can do both in index and stocks. But in stocks, doing with a hedge is 100% necessary because the way it moves up, the way it can get illiquid and so if you talk today's stock option, you have a good liquidity in nearly 50, 60 stocks, at times in 100 stocks also, and you need to be careful onto that part.
I think that fairly answers the question. It's one is your comfort. Whether you're comfortable only with indices or you're okay to take a volatility of a stock. I think, yeah, Tina, this makes a lot of sense, and thank you so much for the understanding of how to read why. So I think that's a very, very important tool that we use as traders to decide whether you should be entering a trade or not. So, a good learning, Tina, I would say. We also have one more question, before we close it. As a retail trader, I can only buy options. What should I keep in mind before buying options? So, as a retail trader, before buying options, what is it that I should keep in mind?
So I would say that before buying, you should always analyze the data, see whether the trend is in your favor. You never take a counter trend. So if I say there is an unwinding happening, don't go for short. If there is a short covering happening, don't go for long. I'm talking from the futures perspective. Always play the primary trend. And if you see that there's a good cycle of long unwinding, play a bullish, go with a long call or bull call spread. If you see a cycle of short coming, go with a long put or a bear put spread. So this is how you can start off as a retail trader in your initial phase. In an option, you can go in a short covering, you should never miss it out. So when there's a short covering happening in an option, go with a long call, because that will give you the most money very fast.
Sure. So, Syed, my answer to you also would be very mindful about losing time value, and that is something which is very important as a buyer, because as a buyer, your premium will keep eroding. More the time that you spend in the market, more is the erosion of the premium. So, be very careful to identify big moves and fast moves. The same way Tina gave you the answer. So, Tina, thank you so much for being a part of the show. It was definitely a very good learning for us as well as the audience, and looking forward to more interactions. Thank you so much.
Thank you, Nanesh. It was really pleasure to connecting with you and the audience. Fun trading and happy trading. Thank you.
Sure. So, for all the audience, if you have any topic that you would like to hear from us, we've got a lot of speakers, who are doing trading or building systems around trading with us. If you have any specific topic that we want to learn about or talk about, please feel free to comment as soon as this video goes live. We will take a note of your comments and ensure that we get an expert to come and talk about the specific topic that you want. So please put down your comments, and we will be very happy through FII to bring the right experts and teach you trading. So, Tina, thank you. At that note, it's been an amazing session, and good luck to all of you who are watching our show, and all the best. Thanks a lot.
Thank you.